Welcome. It's TheoTRADE chat. It's Don Kaufman here. It's bright and early, April 29th, 2024. Just about 3 minutes to go. Do we kick off this Monday's trading session? Spoos are up some 1250. Not much of a read. There's a handful of tech stocks that have some news on them. Other than that, it's a complete and utter slop fest of a marketplace. When I say there's a handful of stocks with some news on it, well, Tesla has a huge bid under it. Look at the big bid under Tesla. Oh, who has the Tesla Catapult on? Who? uh, I appreciate the fact that I got at least 5 or 6 emails about Tesla before and after the earnings. You suck. Why are you bullish in there? It's going to zero. Just kills me. It kills me. Anyway, with that, so Tesla has a huge bid under it. It's not about being right or wrong. It's about I was right. No, this is a leftover Catapult. I thought this one was dead for sure. Anyway, with that, Tesla has big news, and that's actually pretty much your 61 points. There's a bit of an upgrade inside of Apple right now. They'll like me even before the earnings. I would not unequivocally would not read into this before the bell this morning. And I mean that is like, you're going to try to handicap, we're going to do this, we're going to do that. You're not going to handicap anything because you have stuff like NVIDIA that's flat to slightly down. Tesla, which has a huge bid, that's your marketplace, along with some Apple. You've got Microsoft that is mildly down. Amazon, which is has a slight bid under it. Google, which is actually off. Your tech is completely bifurcated, and that's why there's no read over here. You want to tell me it's bullish? That's lovely, but it's not because you see anything in the stocks. It's got to be, I'm bullish because the bonds are not necessarily down. But then again, you do have a VIX that's slightly elevated. So as I was displaying to you, an incredibly mixed bag this morning. Energy is going to open relatively flat. The financials, as I was saying a moment ago, completely unchanged into this morning. If the S&Ps are, again, going to have a bid, it's going to be a very unstable bid, just given the fact, given the fact that we've got such a big bifurcation inside of tech in early trade. So as we're going to come into the cash open here in just a moment, again, I don't have a lot of preconceived notions about what this is going to look like. As I said to you a moment ago, there's not a great read. It doesn't really matter. The S&Ps are up 14. They've got a bid under them right now, but you're going to see some fairly wild trade in the first few minutes. That has not dissipated in any way, shape, or form, which we'll discuss after the cash open. You can see again, they're up. They're right at highs right now. Again, no read into this, into the pre-market other than, yeah, we're sitting listlessly higher, 0.3%. It's come to the bell. So at the bell this morning, excuse me, the advanced decline line is relatively strong. You can see there's a jump inside of the futures here. Look, this is just some, order flow piling in right at the open. And as I said to you, it's directed towards like 2, maybe 3 products. And it's just largely going to destabilize markets throughout the course of the day. The question isn't necessarily, is Apple going to continue to bid up? It's already up 2.3%. And in all seriousness, with earnings coming up, this is a big jump. The problem you've got today, if you get all kinds of bullish here, you'd be missing the fact that NVIDIA is actually off just mildly today. Meta's taking a pretty good hit. And I have to tell you, I saw this down a little bit in the pre-market, but this is actually a really big move in comparison. What's going on in there? Again, it's just noise. It's some order flow piling in. Don't have a good read or feel. There are times, you got to come into the marketplace with just that, look, and you'd be like, oh, hey, they're up 19 right now. Doesn't mean squat, right? It's a couple of order flow imbalances kind of playing out. We'll see what this thing looks like in the next few minutes. You see Tesla coming back in a little bit. I wouldn't expect Tesla to see some sell side in here. I think Tesla's probably going to bid right back up okay, kind of stabilize somewhere maybe in this 190 level. That would be at least my anticipation of trade early on. Apple is what is carrying most of the market. There's no question that Tesla's just, it doesn't have the magnitude, obviously, of Apple, but Tesla's up 10%. But Apple is a behemoth that's up 2.6%. It's running right now. And in all seriousness, that's your market. I mean, that's the whole market today. Maybe Nvidia comes back here in just a few minutes, but again, your market is brought to you this morning by Apple, and I don't have any illusions about what you're going to see inside of order flow over here in Apple. Only to say that again, as I was saying a moment ago, Apple has earnings. Okay, later this week. I think that's Thursday, right? So they're going to come out Thursday after the bell. And to that extent, I don't think that Apple is going to be this tremendous runner. I mean, again, even 3% today is significant, and I'll show you why. Given the fact that Apple has earnings coming up, then we have a $7 expected move all week, and that includes earnings. So, ladies and gentlemen, Apple, it's not a big mover or shaker. Yes, it moves markets, but it's nowhere near like the power of even a Meta around earnings. I mean, Meta, that thing dropped the whole marketplace. Obviously, Apple could move markets, but it has nowhere near the implied volatility packed in for the earnings announcement, and that is significant to the S&Ps specifically today. That we've already moved $5 out of a $7 move for the week. Okay, and in that $7 move for the week, that's encompassing its earnings announcement. That just seems pretty far fetched. You're open for 3 minutes and you've already moved as much as you're supposed to move almost to earnings, right? That's again, that's why I'm not going to tell you that Apple, is done here per se, but I am going to tell you it has had the larger amount of the move that it's going to have today. I mean, if there's going to be something throughout the course of today's trading session that maybe we fade, it could be Apple because it's already up 3%. From a statistical point of view, that thing is already stretched and you're 4 minutes into the trading week. I like it. Anyway, bringing up Tesla. As I said, Tesla, don't be surprised to see this thing sell off a little, come back and like kind of hover around maybe the 190 level. The reason I mentioned 190, I don't know anything. That's basically where it was in the pre-market. So it's very well charted territory. The algorithms like me. They really, really like me. So when I came on this morning, the S&Ps were up 12. They've jumped about 11 handles or so, 10, 11 handles here. And you're kind of like, we're off to the races. Maybe. As I said to you, it's more or less this tech bifurcation and how it's really going to play out. And the reason I say maybe, okay, am I wildly bullish today? Absolutely not. Am I bearish? Not per se. I think what you're going to be up against is, Apple versus possibly Nvidia plus Meta. Meta Nvidia started off the day a little bit weak, and just to make a quick point here, there's no order flow to really read into yet. How many calls are being bought? How many puts are being bought? There's definitely some put buying going on inside Nvidia. Maybe that actually leads to a little bit more sell side, but I'm going to say this: I'm not, categorically bullish on S&Ps here, and I'm saying that to you not because hey, the day may end up a little bit higher, okay, but I think you need to expect there's going to be some kind of violent pullbacks in here because there's no trade driving the market. There's none driving the market other than tech right now. Nothing. Okay. I don't, well, but this stock, Don, there's nothing driving trade. Look at the financials. They're unchanged. Take a look at the energy. It's basically unchanged. There is no trade driving markets other than bifurcated tech sector. And that to me absolutely unequivocally sucks. Okay. If you're trying to position intraday and thinking about like, is this going to be a range day? Is this going to be, a bullish, trend, up day? You ain't got a handle on anything yet. And one of the things that I've talked about a lot lately, especially in the midst of volatility, is just that. You got to stop trying to handicap either number one before the market opens. Okay. You just don't handicap anything before the market opens. You got to sit there and basically be like, well, this is going to happen today. Because the one thing I gathered before the market is we are bifurcated. We're not even rotating towards sectors. We're rotating within one sector. They don't today. They like Apple because they don't like Meta, and Nvidia scares me. Nvidia scares me for sure. That's basically what's going on today. And again, I'm suspect of Nvidia starting to see some put action in here and driving the shares lower, because if you actually take out Nvidia, you're going to take Meta along with it. Okay, because that's going to happen. Why not throw in a side order of Google in there? I looked at Google. There isn't really much news in Google this morning. I mean, there's actually upgrades in Google. So if you think that upgrades are what are driving Apple, you'd be right. But upgrades are clearly not driving Google because it's a rotation. Google, how to Google into Apple? There's rotations. Meanwhile, you're starting to see real selling bleed through in Microsoft. This is going to pull back the S&P, is going to pull back the whole marketplace. All right, because the only thing, of course, that could offset Apple is the infamous Microsoft. It is bigger. It is. It is. All right, let's cruise back over to my monitor tab here. I've got to take a quick glance at this Tesla trade. So I'm shopping the close of a Tesla trade that is in the money. It's early in the day. I might let volatility kind of settle in here a little bit. Yeah, I don't want to blow this one, but I also I want to get out of it when it's made a little bit more. But I'm at $3 on a spread that, by the way, I'll quantify this for a second. So inside of Tesla, I've done a couple of different trades inside of Tesla. This is an earnings trade, but the origin of the Tesla trade I'm looking at right now, I paid $1.35 for, right? So I paid $1.35. The only thing is I didn't pay the $1.35. I covered 100% of the $1.35 by selling an MES against it and covering the MES. So I'm completely free and clear and free ride inside of Tesla. And I'm a little bit upset about where I can get out of it right now, but I am going to put in a price here. I can see the mids 310. I'm going to put in a price of like 350 and just work it for a portion of the day. Okay. And you're like, there's no way they're going to fill you at 350, Don. Yeah. What's going to happen though is Tesla will kind of settle in right around exactly what I said, which is going to be that 190 level. And as soon as what'll happen is this thing will dip, it'll rip, it'll settle in here at 190, and they'll drop the vol a little. The bid offer spreads will start to come in. And I actually do stand a decent chance to fill down the road this morning. You can see the bid offer spreads will be 15, 20 cents wide, right at like that 190 level. My spread, if I were able to get out at 350, I think I would be fairly happy with that. And you're going to see this mark. Mark is the mid price. You're going to see that bounce around. It'll be like 285, 275, 310. All of a sudden it'll be $3, 305, 325. Keep an eye on the mark. And the reason that the mark is so wide is, and it's such a big variation. You have wider bid offer spreads in the midst of some pretty heavy vol. Like Tesla's up, 12, 13%. And that kind of volatility, even though we're moving up, that kind of movement is sparking vol to be a little, it's a little aggravated. So the bid offer spreads that are wider in here are impeding upon what would be a decent fill for me. Now, there's no way in hell I'm going to fill at 350 right now, but here we are. Now we're at 305, 310, just as I'm saying. So as soon as we get above 190, I knew that things would kind of calm down because that is kind of well-trafficked area. So again, I was expecting us to come to 190, do a little dance, make a little love, get down tonight. And that's where there's no technicals whatsoever. Okay, I'm not using any technicals for that. All I'm doing is, knowing how the market making business works. Okay. And that is to say that, hey, as soon as you actually find a comfortable place, to kind of mellow things out. By the way, as I was saying minutes ago, if you're sitting here trying to handicap that the S&Ps are going to be bullish, think again, right? And I'm not saying that to be bearish. I am telling you without hesitation, we are still in a very heavy volatility situation. And people, they still think, okay, that this is going to happen. What you had is sell side activity and a bid back. Okay. Now, one thing I want to tell you about sell side activity and a bid back. Okay. On the bid back, the assumption is right now we're still in the midst of, hell in a handbasket in this marketplace. If you do not have that assumption, you are under literally the wrong assumption. Okay. You're a bid back until you get, for instance, to 5,300. Until told otherwise, you assume you're in heavy volatility. I will stress that again and again throughout the course of today, tomorrow, before the Fed comes out later this week. You are in a bid back. The bid back is not significant. It was a vicious rip your face off rally that everybody anticipated. Okay. Eventually had to come. But what we had on Friday, kind of nothing. Okay. The S&Ps were up 50 on Friday, Don. Yeah, it's kind of nothing. I mean, it was, outside the expected move, but the move last week, the entire move last week happened on Tuesday. The whole thing last week happened on Tuesday. After that, it was just chopping volatility. It was a nothing move on, Thursday we actually retraced, pulled back, exploded back up. But it is amazing how quickly people will forget what volatility is after a bid back under a marketplace, and they just go, yeah, it's all clear. Nothing in this tape is sounding the all clear. That was the entire logic behind the weekend update. Okay. There's nothing in this tape. In fact, the tape actually portrays, first of all, you want to start with the crisis in the yen. You think that's not going to actually come home to roost here in the S&Ps? You're crazy. Okay. People are going to get real nervous about currencies. I'm getting squeamish. The little yen carry trade, boom, exploded. We'll talk about that more. Actually, it'd be nice to have Brandon and Blake. We'll probably go into quite some depth today about that. Again, we have to get away in the midst of volatility from the idea that, from the bell, what this is going to feel like, what this is going to look like. All we told you is there is no financials right now. Okay. There's not really any energy sector. It's not moving. It's a bifurcation within tech. And quite frankly, okay, NVIDIA was the kingpin in here, which is exactly what we talked about, is NVIDIA was south. And look at this. They're buying some puts in NVIDIA. You continue to buy puts in NVIDIA, you'll continue to drive NVIDIA down. But if you drive NVIDIA down, you're going to take Meta along with it, which is exactly what you're seeing on the screen. Okay. Take Meta with it. Google was already seeing some sell side earlier today. You're off to the races. And again, the only thing that can offset Apple, okay, is a big, ugly Microsoft. Now, on a percentage basis, they're not in line. Microsoft's, loss is only 1.4%. We'll see. Okay. So now we're back to massively unchanged in this morning's trade. All right. Meanwhile, back over here to my Tesla trade. Yeah, I'm working 350. I'm going to continue to work 350 to close out of a Tesla Catapult. If you're in it, work it. Because this is one that I did quite some time ago. That Tesla Catapult's been on since March 15th. Ooh. Okay. Like, month and a half, not half bad. Nasdaq is going officially negative, prognosis negative. We'll see how that thing actually suits us in a few minutes. Meanwhile, overall, okay, that NVIDIA trade is actually helping Don today. The Meta trade is helping Don today. Okay. And by the way, Meta, which is my least favorite product in the entire S&P 500, the truth be told, I would look, even to the remainder of this week, if it can get back into that 400 realm. I just, have a big bullseye for Meta, the 400. And please, I don't have anything to go on. Okay. That's $33 away with about a $16 expected move this week. Just throwing that out there for you. $16 expected move. That's from here on out. But and yet I'm looking for this $30 move. Okay, that would be real, and it is spectacular. So I like it. Okay. There's not a lot of pockets of strength in here. I mean, you can look around like Boeing, this thing's had the living crap beaten out of it. Caterpillar, okay, has seen some rough sell side activity following its earnings. It's got a bid under it. I'd be careful in here. This thing looks like it could roll right back over. Okay, the energy sector is trying to recoup a little bit today, but not going to get there. The financials, okay, they already kind of came off a little bit after that bid back under them. There's no feel whatsoever today inside of trade, and these are important because no one's rotating like out of tech into financials. No one's rotating out of tech into energy. They're rotating within the sector of tech itself, which makes the read really freaking difficult. I mean, all you're seeing is capital move out of NVIDIA, out of Meta, out of Google, out of Microsoft. Let's all go into the Apple basket. Okay. And Apple, once again, there's a $7.50 expected move. And ironically, 17 minutes into a trading week, and you're almost home of the expected move, okay, for the entire week with its earnings. All right. It's crazy. Anyway, that's completely sloptastic out there right now. But the S&Ps are again, some volatility, a bid back. I kind of anticipate this possibly rolling over. It's one thing I'm not looking at this morning. I'm not really paying any attention to the ticks. It's kind of a moot point. Okay. The ticks are actually pretty mellow. And the advanced decline line, look, let me tell you about advanced decline line today. You could have 90 stocks positive, 90 stocks positive. But as long as you have Microsoft, Google, Meta, and NVIDIA down, doesn't matter. Like, is it going to make a difference? Okay. You have the, the end all of be all of stocks. And meanwhile, Amazon is slipping right now after being up quite readily so in the pre-market. This is sell tech except for Apple and Tesla, period. All right. And Tesla hasn't even been a player lately because Tesla is presently only a $600 billion company, right? I mean, there's nothing else really even close to it, like Meta. Meta's still 1.1 trillion. Okay. NVIDIA is good for 2.15 trillion. What else you got? You got Google. Yeah, it's 2 trillion. Amazon. Oh, it's just disgusting, I tell you. Okay. I mean, Tesla's kind of an afterthought. They got left in the dust, which kind of makes sense. I mean, it's obviously having an impact in the Nasdaq today, but it kind of makes sense that it's recouping and moving this much. This was a $140 product that is now a almost $190 product. But what, 4 or 5 days later, take a look at auto expected moves, shattering the expected move last week when its earnings came out. Once again, shattering the expected move by double in today's trading session. Look, I don't have a lot of preconceived notions about what Tesla is going to look like even a week from now. I don't. Okay. But one thing I can tell you is a product like that is, it's suitable to be able to take some shots on right now. That's exactly what we've been doing. Take your shots in Tesla. Okay. It's decent. Its volatility though was really elevated today following some of that news announcement. There really wasn't anything definitive news. Elon Musk got on an airplane, okay, and flew over to China. Okay, did a little dance, made a little love, came home, and his stock is up, 12, 13%. Gotta love that. Got to love it. Anyway, let's go onward and upward. A couple things, a few announcements I got to make on the week. Get you guys comfortable with the expected move. Again, the one overriding theme this week, okay, volatility is most definitely here. And it doesn't matter, by the way. I know we're going to talk about like it's the end of the month. End of the month is not going to make a damn bit of difference. You have Fed coming out. We have what I would term economic bombs being dropped all throughout the course of this week. Okay, this is going to be pretty much the largest catalyst-driven week that you're going to have uh, for months. This is the biggest in terms of catalysts. When I talk about that, you have Fed, you have unemployment. Okay, it just continues to go on and on. And we're going to look at the calendar in just a few minutes. By the way, the marketplace right now to me looks much heavier. Looks like you're going to see some more sell side start to hit Nasdaq stocks and maybe put some drag into the marketplace. We're going for another round of sell side throughout some of the big tech stocks. And everything just turned back down negative in the last couple of moments. So again, I'm warning you away from looking at ticks right now. I'd warn you away from looking at advanced decline line and just try to rationalize that everything that's going on today is just this bifurcation inside of big tech. Okay, it's the war of tech, and nothing else matters. So it makes trade kind of feel choppy, disconnected. Okay, speaking of which, let's come to it and actually discuss SPX for a moment. One thing I want to start with is one thing I really want to start with. As I was saying a moment ago, like there's this feeling that as we rallied back up, last week, that volatility was, that's it. It's all clear. They're going to come in here and buy the dip. First, I would make a very brief argument in saying, okay, this is probably not dip buying. Dip buying hasn't really occurred. What you had is, some shorts covering, and that ignites the marketplace a little bit to the upside. Fine, done. Okay, I got it. The reason that I say that you got to be on your game, look, I'm not saying that because I just see a couple of factors that are odd, like, volatility remains a little high. Push all that aside. Okay, don't listen to me. Listen to implied volatility. And implied volatility, okay, is still screaming high comparison to what it was just a few weeks ago. So if you look back a few weeks ago, there's a lot of weeks in here, okay, that we had $50 expected moves. Okay, call me crazy, but $50 expected move. Last week you had a $96 expected move. The week before that it was 100. The week before that was 100. Okay, this week there's still like an $82 expected move. So did some of the volatility subside? Yeah, minimally so, but absolutely. Okay, but you're still on an $82 expected move, right? I'm trying to make an eight with a mouse. You're still on about an $82 expected move, which implies about $82 of movement higher or lower. That is still a decent sized number, a very decent sized number. Now, again, is it as big as, $100, $5 expected move? Absolutely not. And this one back here was about $100 expected move. No, but at the same exact time, we're coming off of a week that saw a break above the expected move. This back here was a week that was some serious sell side activity hitting the lower edges of expected move, rightfully so. That's why implied volatility here was what? It was, 15, 20% higher than it presently is. So the one thing I'm just trying to display to you by looking at this in a quick glance, when you finish above the expected move, yes, implied volatility does contract by 15 or 20%. Okay. But that in no uncertain terms, no one has sounded the all clear, okay, for volatility. And if you have, it is a huge freaking mistake, right? And earnings, forget earnings. Who the hell cares? Apple's going to move the market. Apple is moving the market today. But there's also going to be what? What else is going to make a difference? Okay. Yeah. Amazon. Yeah, that's great. By the way, I was talking to a buddy of mine about Amazon the other day, and he's not in this business. So it's one of the friends I have that's not in the business. He's like, well, Amazon though, I mean, their cloud business is going to be spectacular, and I would totally agree. Cloud business would be spectacular. I think though on their retail side, you're going to get the crap kicked out of them by Temu and DHgate and Shein and 5 other ones that are popping up. I think it's going to be interesting to see Amazon's earnings announcement. So I don't have a lot of illusions about what this is going to look like. It's after the market tomorrow. We'll talk about actually possibly trading it tomorrow. Because anybody have a good feel for Amazon right now? because it's going to be bifurcated. If you take a look at the company profile in here, all right, the point being is, yeah, the cloud service is almost half their business now. And then this is what we call crap they sell. And it is just crap, but it's almost a pure 50-50. Amazon International. Anyway, point being, I ain't got a feel in there, neither does anybody else. You know how we know we don't have a feel. How do we know we don't have a feel? Watch this very, very carefully. Okay. Pay attention. Amazon, okay, is a $180 stock with a 90% vol and a $14 expected move. Great. Apple also has earnings this week. The stock is priced, okay, very similarly. It's a $175 stock, a 48 vol, a $7 expected move. Okay, market already has a pretty good feel for what Apple's going to look like. Amazon, not a clue. Okay, that is how you know, instead of just looking at it and go, oh, it's a 90% vol, that's really, really high. Volatility is going to go higher. Like, who cares? But the expected move in Amazon, okay, is roughly and almost double what it is inside of Apple, but they're priced almost identically, right? And that's what is I think it's very cool to look at that, because you're comparing apples and Amazons. Okay. Yeah. I like what Andy said. They treat their employees like dirt. Actually, I have a friend that works, or a friend's son who's a manager at Amazon. And then I actually have kind of an extended family member that also works for Amazon. They both love it. And they're in management, and you know, one of them's like a junior executive or whatever. Love it. They don't ever come home. Maybe that's why they love it. Okay. That's why they love it, because they never get to come home. uh, anyway, yeah, one of the guys is actually married to my cousin. You wouldn't want to go home either. Like, that's not very nice. Okay. Nice. Okay. Helping the guy out. You work at Amazon. You never have to go home. I'll feed you. Okay. Water you once in a while. You just stay there. It's good stuff. Anyway, with that, FX Frankie, nope, it's just you, man. Okay, it's you. It's not me. Anyway, S&Ps are just sloshing around over here. So let's talk a little bit more about the some of the expected moves and kind of go from there. The aspect that I did not cover, okay, is, again, as we said, volatility is still very much with us, but today's move, all right, is roughly plus or minus $28. So today's expected move, and that's also kind of important because we haven't moved anywhere near there. Today is plus or minus, what is it, 28.25. That to me seems like a big move for today, given the fact that we've only moved $10. So we've only moved, well, nothing. And that's why I said there's like not much of a read on that. So time out there, cowboy. If you think volatility is starting to die down on the day, okay, maybe it is, maybe it isn't. But again, some of these tech stocks still kind of settling in. Look, Nvidia's got a bid back under it. Okay, now it could be a completely different marketplace. Now is when some of you that are looking for directionally biased positions, if this Nvidia bid continues, S&Ps go up, Nasdaq goes up, period. No if, and, or, but about it. So those are going to be some important minutes right smack ahead of us, because Nvidia right now is carrying the markets higher. I would assume that Microsoft is probably going to pull back again, right? Again, bifurcations everywhere. I like it. And again, if you are looking at this tape and you're thinking, it's very confusing, it's good. There, that's okay to say. It's, you know, it's very confusing. Of course it is, right? You have one sector and they're just like rotating from one side of the sector to the other side and keep going back and forth. All right, it's fun stuff. Fun stuff in here. So again, we have a decent size expected move. We're about halfway home to that right now. Next thing on the docket, the calendar. Okay, it's not, you know, but maybe every couple of weeks that I actually bring up a calendar. The number of financial, okay, tape bombs that you're going to see this week. For those of you, allow me to quantify what I mean by tape bombs. All right. Tape bombs are basically any type of financial, okay, economic announcement, earnings. The number that are going to hit the tape this week, okay, is immeasurably large. So today, what do we have ahead of us today? Absolutely nothing. Today is the only day you're really not getting much of anything. Like the Dallas Fed manufacturing survey. I have no idea. Um, Tuesday, Tuesday, we start to pick up a little bit, okay, in terms of economic tape bombs. And again, I just call them tape bombs. Only reason I'm going through here, look, I don't care about the Case Shiller Home Index. I don't care. That's not going to move markets. Chicago PMI and consumer confidence can move markets. So I'll be live tomorrow when those two are on. The Chicago PMI and the consumer confidence numbers are important. They can move markets. And this is not your Michigan, consumer confidence survey. Anyway, onward. When things start getting a little bit more serious is Wednesday. Now, of course, Wednesday, immediately you're going to think he's going to talk about the Fed. He's not going to talk about the Fed, right? There's PMI manufacturing coming out. There's Treasury refunding. Oh, I forgot about that. The Treasury funding announcement. Okay. I think there's one this afternoon too. Okay. I apologize, but I think the Treasury refunding announcement is this afternoon, and that is not on this calendar. Drives me insane. Comes out today. I don't know why it's listed on Wednesday. By the way, for anybody, I've not been able to find the exact time and date of that announcement. We believe it's going to be 3 p.m. Eastern time today. The refunding for the Treasury may finally come out. And again, this is on this Monday. It is not listed in the announcements here. So I don't know why it's here on Wednesday, because the one thing I am positive of is that the Treasury refunding announcement is today. It's not, again, I don't know why it's listed on Monday. Maybe that's when they actually post it. So coming on Wednesday, PMI manufacturing, construction spending, JOLTS. There's three that are market movers. ISM manufacturing. Okay. These are all market moving events. That's before the Fed even speaks. All right. So that's critically important. Okay. Anyway, you're just chock full of nuts on Wednesday before the big announcement comes out, which is, of course, Fed. Thursday is a crap fest. Thursday, as Challenger, job cut, again, there we have a bunch of different job numbers where people will talk about ADP. This week, I didn't even mention that ADP will move the market on Wednesday, okay, even before some of the other announcements. I mean, it's crazy this week. That's before market. The Challenger report, nobody usually cares about. Factory orders, totally a market mover. Okay. There's not that much going on Thursday, and we're going to end the week with the big gorilla, which is, of course, the employment situation is coming out. We have an employment situation, PMI, ISM. It's a crap fest. There's so many catalysts this week to move markets. And again, I'm not going to sit here and okay, and try to handicap what each announcement is. It's ridiculous. Okay. This week, if you said to me, Don, where do you think we're going to be by the end of the week? The first thing and only thing I would look at is the expected move, right? I can't stress this enough. If you ask me where we're going to be at the end of the week, the only thing I'm looking at is the expected move. So get this $82 expected move. Well, we're going to crack a little higher. We're going to crack a little lower. I mean, overall, okay, I'm a big advocate that volatility is still very much alive in this marketplace. So unequivocally, I will say this, okay, I think you have a very good probability this week of getting the living crap scared out of you to the downside. You very well could test lower edge of expected move this week, even before the Fed announcement. Okay, would make a lot of sense. Volatility, Volatility is such that hitting this lower edge of expected move, when I say scaring the crap out of you, moves this week are going to be very fast. They're going to feel broken. They're going to feel disconnected. You're going to be left, holding your mouse in your hand going, oh, hold me. Okay. And you should come into the week knowing that, because you're in what feels like, they bought the dip. It's kind of mundane. That's what people are going to say to themselves right now. Okay. They bought the dip. It's kind of mundane. You will remember something that I've said for, I don't know, 20, 25 years, and mentioned here all the time, but markets go as far out of their way as possible to screw each and every one of you individually. Once you believe that you have a good feel for this marketplace, okay, you're going to know that you're back in volatility. Just remember that for the remainder of the week. It's going to be a little bit of a rough ride this week. No question about that. Now, let's get down to some details. I barely mentioned bonds today. The bond market right now, okay, you can go ahead and say it's pausing a little bit. It should pause a little bit. It's got economic, minefields in front of it. Okay. The bond market is what's really going to be in play. And that's actually why I was kind of, I'm not saving for the best for the last, but this crap's important. The bond market's completely in play this week. And the reason it's in play is, well, again, all the economic data coming out. Forget the damn Fed. The Fed's not going to do anything. Okay. If anything, the Fed's going to cause more volatility. They're going to get a little hawkish, do a little dance, make a little love. Anyway, the reason that I have concerns of the bond market, I mentioned in the weekend update, this thing is aligned perfectly to just boop, break down. And if it does break down, good night S&Ps. The S&Ps might be back near all-time highs, and that's fair, okay? But the bonds are very close, through recent lows. You got to come all the way back, all right? Quite a number of months to see bonds at these levels. Moreover, what is the real situation at hand is how easily the interest rates could spike to 4.8, 4.9, or God forbid, even 5%. You get back up there in the next few weeks, you're going to have some big trouble in the marketplace. Remember, I am a very big advocate and an opinion that the Fed, they can't slay that dragon of inflation without killing asset prices. Okay. And when they make that assumption, okay, when the Fed says, you know what, damn it, asset prices are actually causing a lot of this inflation. If we just knock asset prices a little bit, okay, it'll kind of quiet down some of the inflation. Remember, asset prices are not part of their mandate, okay? But they'll do anything possible and anything plausible, okay, to hit their mandate. We'll see. This, again, this could be an interesting Fed announcement. I don't put a lot of weight into any Fed announcement, especially when there's zero chance they're going to move rates. But what they say, things are going to get a little bit more interesting. Every time you kind of build up Jerome Powell, though, it kind of lets you down a little bit, right? It's just that's Powell. That's Powell in a nutshell, letting me down at every single stance. So get ready for a lot of economic news. But my assumption right now, very simple assumption, okay, coming into this economic news, we're going to be trading right here at this 113 handle. We're going to be right on the cusp, ready to break a little bit lower. Okay, more interesting than even the bond market right now is the dollar. The dollar is also poised for a full-fledged breakout to the upside. So the dollar is in play, strength in the dollar is in play. I think that the dollar's strength is indicative, okay, of broader weakness. If you ask me about any sector in the S&Ps right now, I would say, well, they're in trouble because volatility is starting to kick in, right? The bond market is actually very close to lows. The dollar is very close to highs. You do not have to ask me about individual sectors, okay? Because there is no individual anything. We're moving, okay, in a volatile time, which lends itself to being highly correlated. So if markets are going to progress lower, and I think that markets are going to get some scares in them, possibly lower, and in doing so, it would pull all the sectors with it, with the exception maybe of energy. Energy is a very difficult one. Forget about geopolitical risk. It's the energy sector has been its own animal lately, and rightfully so. It's trading along with some of the commodity markets, not so much with the S&P 500. That would be the only sector that could be kind of the odd product out, but everything from, financials and real estate and consumer staples and, whatever, okay, they should all track pretty closely with the S&Ps. Like there's not that individual kind of feel to the broader marketplace. So that is relatively important. Again, a lot of this, though, being predicated on the fact that there's a strong dollar. Now, I'm going to leave a lot of this dollar discussion to both Blake Young, who specializes obviously in currencies, and Brandon Chapman, who specializes in geopolitical, risk and so forth. But I will make just a quick statement on the Japanese yen. First and foremost, if you're unfamiliar with what has transpired in the Japanese yen, well, I mean, not in just the last 24 hours. Okay. What's happened in the Japanese yen, I know it doesn't look like much. Okay. Let's pull up a max chart. It's crashed. Okay. The Japanese yen is completely getting demolished. And that's not an overstatement. It's getting demolished. You're going to have to worry about this ultimately causing a crisis, even here in the US. At this point, of course, everyone feels that the Japanese yen is contained. Of course, that was until last night. Last night, the Japanese yen crashed, it recovered, it exploded higher, it faded again. All of this, though, is during holiday trade. Okay, so Japan's in holiday. It's holiday trade and very, very light volume overall. There's serious, serious issues. This totally looks like the Bank of Japan is defending. They have not made a formal statement, as far as I am concerned, other than to say, we're on it, we're monitoring it. That's all they said, is the situation is being monitored closely. Okay. I believe what you're seeing in here is intervention of Bank of Japan. Why am I mentioning it? Because it's been many, many years since we've actually seen, okay, a full-fledged currency fail. All right. To where, rescue me. I'm not talking about the Bank of Japan. You're actually seeing the Bank of Japan step in. In my opinion, this is totally the Bank of Japan stepping in to try to create a bid back under their currency. What you haven't seen in a long time is trade and traders themselves overwhelming, okay, a bank and a central bank. I think you're incredibly close inside of the Japanese yen. I'm going to leave it at that. The implications of this, okay, too far, too wide for me to even try to put your arms around. Okay, I mean, this is a catastrophically large move in the yen following a tremendous crash last week, and it was following into a crash. But could this be a little bit of a bottom because volume was so high? Sure. By the way, the yen traded heavily in the futures market, but the cash market was basically closed and barely traded at all. So we really don't know when they open this thing for real, the cash marketplace, what the hell's going to happen. Okay, this is going to get sketchy, and the crisis in the yen. To sit here and try to explain the yen carry trade would take me an entire, hour and a half. I mean, to really go into the depth of like the yen carry trade, but the U.S. totally relies on it. The yen carry trade is absolutely critical. It's crucial. Okay, more than we could ever even know. The implications of it, though, are so far and wide of a yen crashing that is again, I couldn't get my arms completely around it. But I will say this, okay, when currency crisis arises, like first world currency crisis arises, you got some big issues. There's a very famous saying in markets, and one of the famous saying in markets is actually about the Mexican peso. And the famous saying is, we got a peso problem, okay? And the peso was always a great demarcation of like, horrendous financial stress in the world. literally the Mexican peso. For those of you that have been around, you got to be around a lot of years to know that one, the peso problem thing. That even way predates me. The traders used to say, we got ourselves a peso problem, which implied all hell is about to break loose. This is the Japanese yen. This is not like peso. This is serious. Okay. And as I said, the implications are far and wide. I think you just have to understand at this point. Okay. What the crazy thing is, the implications to the Japanese markets. Okay. I mean, you could see actually first world country go into hyperinflation. Okay. We've seen what hyperinflation can do. That's been, maybe some second world countries. And I don't want to diminish. Okay. Don't let me diminish any of the countries that you might be from. But the fact of the matter is, if you start looking at stuff like the Nikkei, okay, it could create a bid to the upside. It could actually fail. It's really hard to tell the implications of this. You would think that this marketplace was going to crash. So if we take a look at EWJ, EWJ is the iShares, okay, Japanese ETF. Like if you're going to trade, you could trade yen, but yen is pretty chaotic. Like if I were going to trade yen, there's no question you'd want to trade from the long side, because the short side, you can get squeezed to death on that thing, especially when the Bank of Japan. But I think that the more appropriate way to look at this is going to be inside of the EWJ. And the volatility of the EWJ doesn't look very high, okay, for the kind of risk. Now, there's not a lot of options activity in here. People are definitely, place your bets, place your bets. There's not a lot of option activity in here, but it's enough to where you can actually trade it. I'm going to think about it over the next few days. I'm going to let this play out a little bit, though. The implications could be bullish or bearish for this. You would think that, Japanese currency is falling apart. You're going to see what? The market's going to crash. Actually, on the contrary, you can see the market explode higher. Goods and services going to hyperinflation. This thing actually flies to the upside. It's just a wild premise, but anything plausible in there at this point in time. So the Japanese yen is a wait and see, in my opinion. Okay, it is not something I'm going to be jumping into, but it's one of about 6 factors going on in the world right now and inside the markets that you have to be concerned about. And I think it's a fairly large one, to where, again, it's been a very long time since we've had to look at US markets and think outside the US. You're like, don't worry, Meta will save the world. Okay, this pile of crap isn't going to save anything. Look at NVIDIA. They like me. Okay, NVIDIA's come all the way back, but meanwhile, Microsoft continues to actually struggle a little bit this morning. Okay, we're all over the place, and I like it. Again, I'm not firing off a lot of trades though this morning. I mean, the day I hate days like this where I have to kind of let it evolve a little bit. Apple's coming back off maybe. Anyway, let's go onward and upward. Okay, so we were mentioning Apple. Apple received a couple of different upgrades over there. Yada yada yada. It's got earnings coming up next. We mentioned the yen. Great. Tesla. I continue to wait to try to get out of a Tesla trade. My Tesla trade up about 110 to 115%. I'm actually working a 350 order. There's no way I'm getting out at 350 right now. It's basically 290. I would say this is probably closer to a 210 mid. All right, you'll see that little guy bounce around. Anyway, I'm waiting very patiently to get out of a Tesla trade. For those of you that are in the Catapult, if you're in the Catapult alerts, okay, be a little patient on that front. All right, we're in good shape over here. We have a spread that's fully in the money. Still got 18 days left to expiration. Okay, just letting it, back build, let volatility die a little bit, and we'll see what we can get out for. Frankly, even though we have 18 days left, okay, I am feeling a little bit of pressure to want to get out of there, simply because there's so much more volatility to come this week that I'm going to take what the defense gives me. So expect, if you're in the Catapult alerts, expect an alert to exit Catapult today, or exit the Tesla trade today. largely predicated on the idea is, okay, I think there's a lot of volatility to come. Speaking of Catapult, I've also got trades on QQQ that are higher, trades on XLF that's up about 50%. The S&P position is basically flat over here. Okay, everything's kind of working slowly but surely in the Catapult side of things. The S&P options on futures for Ultima, okay, sitting relatively tight. I'm going to cover that a little bit more tomorrow. We have an XLF in-out spread, okay? It's right where it needs to be. We haven't had much movement on the financials in the last couple of days of trade. The financials jumped, faded a little bit, but this is what we planned for. This is what we planned for, people. I shorted the financials, I believe on Tuesday. We faded ever so slightly, like it's basically flat. Just sit tight, it's okay. Like we're not here putting on bearish trades. Like I didn't put on a bearish XLF trade because I'm like horrifically bearish in XLF. It's not why I put it on. Put it on because I'm expecting volatility will be enough to see degrees of profitability in here. By the way, I also wanted to comment. I can see that some of you closed your position for 30%. I didn't get out. I did not get out. So I tried to, but I couldn't. Yeah, it's interesting stuff. Maybe, okay, maybe, possibly. All right. Sorry, I'm just looking there. I'm just glancing through on here. Active on social list, huh? How not exciting. Anyway, with XLF, sit tight. All I'm expecting, a little bit of volatility this week could get us out. But at this point, I'm no longer looking for a 30% gain. At this point, I need that 50, 55, well, 55% gain or better. S&Ps have creeped back up towards highs. As I said to you today, okay, and I said this literally before the bell went off. If you have preconceived notions about what today is going to look like, you got to check that crap at the door, okay? I will continually stress throughout the course of the week, this is volatility, okay? This is not the bullish marketplace that you were in for months. This is volatility. Every hallmark of it is basically here. And in the midst of volatility, when it quiets down like this, immediately people assume, don't worry, it's all clear to the buy and the dip and so forth. Okay. Don't get your head taken off in this marketplace looking for a particular move. Right now is proving my point for me. Don't get your head taken off. If I constantly sound like I come in here on a day-to-day basis and I sound very two-sided, very unsure, and no kidding, that's the idea. All right. All I'm going to do is I'm going to pluck trades being bullish or bearish. I don't give a damn. All I want to be able to do is make money. I don't have to sit here and preach to you about being right because that's lunacy in the midst of volatility. People have to check the ego at the door. This is what I think is going to happen today. You got to get rid of that crap. Okay. The only thing you can say about volatility is volatility will see some wicked moves to the downside, followed by some vicious bounces. Like, that, right? What you want to try to do at best is try to handicap sector by sector, where one sector is going to lead us a little bit lower, another sector is going to have a bid back under it. Okay. There's reasons that I'm putting positions on in the QQQ and the XLF. Okay. And there'll be a lot more reasons what this, depending upon what this is going to look like by week's end. But right now, this is like a little bit of a pause in between some of the waves. Like literally, this is like a break between sets, actual waves. There's a little bit of a break right now. Okay. You should basically sit back and make sure that you're comfortable with every delta you've got on right now. Okay. If you've sold premium, don't leave yourself naked on the downside. Okay. The upside, look, we've all seen vicious moves to the upside. Okay. To get another vicious move back to all-time highs, whatever, it's 150 points to all-time highs, right? That's what it is. It's about 150 points to hit all-time highs. Meanwhile, on the downside, okay, ironically, it's about 150 points to actually start to break lows. Okay. You are dead center inside of this kind of channel over here with a week with about an $80 expected move. Okay. I think you could easily hit upper or lower. In fact, those fall into what we would term probability of touching for the week. Again, if I sound completely open to two-sided trade, that's because that's exactly what we're seeing is two-sided trade. This is starting to be a really good time to get some premium up and running again. But I also love to do in-out spreads over here, because in-out spreads, all you're basically doing is saying like, look, we rallied up. I'm going to put this thing on, just let volatility do its job. Okay, if we continue higher, I can lose money, but I assume volatility is going to do its job. I'm looking to place other in-out spreads in here. All right. I was looking at stuff like Costco again. And the reason I'm looking at Costco again, all it's been doing is just chopping inside of this range, right? So Costco's chopping inside this range. I was trying to catch it at the upper edge of the range. The earnings are not that much of an issue. Okay. They're end of May. So earnings are like end of May. So I can come 25 days, but I don't know. This thing's already down, a little bit today. Again, you'll see me go right back to the same underlyings time and again. If a trade works, okay. If a trade works, I'm just going to keep going right after it again and again. I'll do Costco again, the financials again. I'll come back to energy again. I like to go back to the well. Starbucks is going to have earnings. By the way, I like to actually trade Starbucks as well, but it has earnings this week. So I would be precluded from at least trading that. I could trade its earnings. Okay, this is one that maybe I'll embark upon that a little bit tomorrow. The financials. Okay, you would think that Wells Fargo had like a cure for something. Not only don't they have the cure for something, they're definitely causing something. Anyway, Goldman Sachs also is a breakout to the upside. This could also be a very interesting trade for financials. Okay, obviously I would probably look at this to the bearish side. It's breaking out in a phenomenal way where it actually broke the upper edge of the expected move, but this is an earnings week, shattered the upper edge of the expected move last week, and it's already well on its way. Okay. Goldman Sachs is one of the more interesting players on the screen right now because, okay, if volatility breaks out again in the XLF, look, we already have a bearish trade in the XLF. To have one inside of Goldman Sachs wouldn't exactly, though, double our efforts. The slightest bit of volatility hits the marketplace, they should hit Goldman Sachs even harder. Lots of trades to think about over here. Again, the advanced decline line, I am looking at the S&P 100. Okay, there's really no read on the AD line. The AD line, as I reiterated, the AD line could be 90-10. It's not going to make a difference. Okay, that's just not going to make a difference. There is one aspect that I want to resonate with you as well today. Okay. Again, Microsoft, which is already through its earnings, no dip being bought in here. Apple is purely news driven. Okay. Amazon has been waffling back and forth throughout the course of today's trading session, is starting to reap a couple positive gains. Google, which had just stellar numbers last week, on a fade right now. That's also really interesting considering it had a couple of upgrades over here. Meta is taking a pretty good hit. Okay. Tesla, that's your market. That's your market. Market is Tesla, the market is Apple, everything else in between. No one is buying any dips in here. Okay. This is news driven in Tesla, news driven in Apple, and that's all you have. Everything else is kind of faded. So keep that in mind for today's session. With that, I am going to turn it over to the professor. Jeff Bierman's going to come on here in just a couple of moments. When I give him the link, maybe I give him the link, maybe I don't. But in any regard, Jeff Bierman's going to be in here in a couple of seconds. Cannot stress to you guys enough. Keep your head in the game today, and don't have a lot of assumptions about what we're going to look like a few days from now. You're doing yourself a huge disservice in doing so. Just too often, people are going to try to handicap what this looks like. Okay, the expected move today is $28. Look for us to be 28 higher. By the end of the day, though, we could fade easily. Okay, there's no dip buying going on in here. On the contrary, you're actually seeing sell side activity with a side order of news. So stay tuned. Jeff Bierman's coming on here in just a moment. Rush to judgment, volatility indicator, game changers part 2. Stay tuned. Jeff Bierman's coming on right now.